feel like you need a magnifying lens to see your results, to actually see your results. I'm sure some of you will say yes. Some of you will say no. Some of you will say yes. The reality is that when you feel like you need a magnifying lens to see your results, you might wonder why, okay? That might be, poor quality trades, poor management, or it just might be flat out not enough size, okay? The results should be visible, okay? They should be clear, visible results in your trading. You should see it, okay? See the actual money in your P&L when you do something right, okay? I'm talking about when you take a good trade and you press it, Ben saying yes, a microscope. When you press it and you do everything right and you end the day and you pat yourself on the back, the results should be visible, okay? This is what we're going to talk about today, like real money, okay? So how can size make a difference? Trading with size can make a huge difference in a trader's P&L towards the upside once you become a skilled trader. This is about getting to the place that you want to be, all right? The first time you see a large amount of money in just one play, you will be amazed at how great it feels. You will realize that it is possible to make money trading. The goal is to replicate these profitable results on a regular basis while keeping the risk minimized. Because obviously, if we traded size on every single thing we did and we weren't a skilled trader, it would be a nightmare. And I think that's why people shy away from size, because they don't have enough confidence and conviction in themselves or the trade or the strategy that they're doing. But you have got to get that, okay? Because this is how you're going to make money. Trading with size, doing something right. I call them comma days. Every day you end the day and there's a comma in the number somewhere. Somewhere, it doesn't matter what the number is before the comma, all right? When you can have a comma day, you're making money. And you gotta have a bunch of those days in a month, not just one every 6 months, okay? And if you've never had one, then this is what I'm talking about today. Because the first time you see that in one play, you're going to be amazed. You're going to feel great. You're going to say, yeah, here, it's coming together. Now I know why I did this. Now I know why I've been doing this thing. Now I believe that it's possible. Taking size should not be an alien concept. Look at this guy. In fact, this guy reminds me of that alien guy on The Simpsons, that green guy. It's always on the Halloween shows. Taking size should not be an alien concept. If taking size is alien to you, if you feel like an alien when you do it and press the button, then you're not in a good place with size, and you may not be in a good place with size because you might not be in a good place with your strategy and what you're doing with the entry and why you're in the position or taking it in the first place. Here's an example of size. It's just as simple as this. A 500 share position, if it runs $1 and you get in at the right place and out at the buck, you make $500. Simple, simple. A 2,500 share position, if it runs the same $1, the stock didn't do anything different, it sat there and did what it was supposed to do and ran $1 short, you got it in at the right place, you got it out at the right place at the target, or before it bounced at a reversal time, the profit's $2,500. The stock moved the same amount in the same time. It did something on its own completely what it was supposed to do. The only difference is you made more money because you took a larger position in your trade. You taking a larger position in a stock doesn't affect the stock working or not working or anything else. And that's what you have to realize. The stock is going to do what it's going to do with or without you. If you got 2 shares or 20,000, it's going to run if it's going to work and if it's a good gap and if it's a good trade. All right? So let's get over this fear thing where, we don't want to take size. This is how you're going to make money in the same move that everybody else is in, but you're in it with more. Here's an example. This is the gap. I think this was last week, was it? Yeah, I think this was last week or the week before. This was DDS. This gap ran $6 on the day. Let's just pretend in an imaginary ideal world, you got in this trade at the right place and got out at the target, which was a 200-period moving average. Actually went through the target. The first target was 76 bucks. If you got in up here at the right place and held it to the target and traded it correctly, you could have made $6 on the move. So once again, 500 shares, if you held it for $6, you would have made $3 grand. So it's just numbers. This is all this is about when we're talking about size and why it should not be an alien concept to anyone in your trading. Here's an example of no size. When you don't take enough size or no size, sometimes you feel like you need to keep trading all day long or take more trades. That isn't the answer. Learning how to trade with precision on quality stock picks is the answer, not more trades. If you aren't doing quality plays without size, why should you do more of them? Why? Why? Okay? This is I guess this is the whole thing. I talk to so many people. They're not making enough money, so they think that they want to increase their size and risk more. Well, first you got to just figure out, why aren't you making enough money? I mean, if you're not making enough money, it might be the strategy you're doing or your entries and the quality of your plays. You cannot just start taking more size for no reason other than you feel like doing it. You've got to look and see if what you're doing is actually working first. Because if you're not doing quality plays without size, so why should you do more plays at all? Okay? You're just going to replicate the same thing more. If you are not doing quality plays, making sizable risk to reward payouts with little size, you should not up your risk per trade. Okay? It's about getting the most bang for your buck on quality and risk to reward ratio. This is where this whole size thing comes into play. All right? So size is the goal, but you've got to get good with the entries and precise. And you've got to have a good risk to reward in the plays you're doing. Once you show that you can do that, you can increase the size, and then therefore you'll make more and see the bigger money position. Because the reality is, doing more isn't going to result in more money by increasing your risk. Because what's going to happen is, if you are alien to trading with size and do not know how to do it right, it's going to actually end up affecting you in a negative way, which is not the goal. The goal is to get into a groove with size where you're in love with doing the size. You can't wait to do the size. You want to do the size. You're doing the size right, and you feel so confident in your entry exactly that you can do it, and it alleviates the risk for you. So you've got to get to the point where you're getting a good risk to reward ratio and quality plays in almost everything that you're doing before you can take the size. All right? And here's an example. This is me. Why small size is dangerous for traders over trading. Small size is dangerous for someone like me. You know what I'll do? I'll overtrade like a banshee then. You know, this is what I used to do. It's just like it's crowded. It gets to be crowded. There's too many people here. I got to do too many trades to make what I want to make. It's like insanity for me. Small size is dangerous for traders, okay? If you want to make good money and you find yourself overtrading, it's a nightmare. And I've been there in my trading through the process. And it's dangerous for me even now. I find that if I don't take enough size in something, I manage it terribly. I manage it terribly because I almost don't give a crap. And that is not the place to be. So size is the answer because it's going to force you to do it right. But you've got to prove that you can get the right entry on a quality strategy and a quality play, that you've got good risk to reward ratio. And that's what I'm talking about when I'm saying quality. What I mean by quality, I mean you know where to get in. And that where you get in, that you're going to get a payoff, whether the stock goes to target or not. You're going to get 3 to 4 R's at minimum. And if it goes to target, you're going to get a lot more. So small size tends to be dangerous for traders. Why? Because they overtrade. And this is lots and lots and lots and lots and lots and lots of people. They take one good trade. They take 100 shares. It goes $1. They do everything right. They make $100. Instead of stopping for the day, if they had taken 300 shares or 500 shares or 1,000, they feel like they want to take another trade because they're up 100. Then they take 2 bad trades after that, and all of a sudden now they're only up $30, and after commissions they're down $10. You see how this goes on and on and on when people are working on upping their level and trying to make it. You've got to just figure out how to do it right in reference to the entry and the gap and whatever stock you're trading, whatever the strategy is that you're doing. All right? It's about quality, not quantity. Risking money always has to be about quality to get paid consistently. It really does. And trading always has to be about quality to see results. Taking quality plays means plays that have a good risk to reward, even if they don't go to target. So you have choice to piecemeal out of it or hold it to target. Ben says I've been watching him. Quality plays should have 8 times or more payout if they go to the target. You should not need a trade to go to target to get paid for your risk. That's where the danger comes for poor money management and poor management of a trade. Because you start to get to the point that you feel like you've got to have the target, and if you don't have the target, you're not going to have a day in, and if you don't get to the target, you get frustrated with yourself, and you overtrade then, do something else, eventually get out of the trade that didn't go to the target, and then you end up doing all kinds of other things, and all of a sudden, before you know it, you gave this one beautiful trade that you did take out, back, and you did everything right with it, you just didn't take enough time. So are you surprised that the answer is quality? You shouldn't be. Anybody that knows me by now, this is everything that I do. This is why I have a very structured system that I use to choose what I trade. It is about the quality. This is how you make money. You make money and quality plays with size. That's how you make money trading. You don't make money trading sitting at the desk 8 hours a day for 5 days. You don't make money trading taking crazy trades that look like they have a big target, like gap fills or picking bottoms or doing nutsy things that look like they're going to be home runs. You're going to make your whole week or month in 2 days or one trade. That's not the answer. It's got to be about the quality, and because you are doing it in quality, you will see consistent results because you're going to get used to doing that, and then as a result, your confidence level is going to increase, and therefore then you will take size in trades. It's really about the results. Once you start to see the real monetary results using size in an effective manner, you will be amazed. You will feel ignited, and you will feel alive, and you will feel passion again about trading and making money if you lost it somewhere along the way. There's many people that are trading for a while, and I don't even know why they're doing it, quite frankly, because they've lost their passion for it. And I think that's why people find their way to me. I'm igniting a passion in people to trade, just to trade properly. There is nothing like results to help you make progress in your future goals, specifically in your mind, and your confidence level will increase dramatically, and this will translate into even more profitable results. It's like when you're on a winning streak, when you're just banging it out day after day after day. Even just one good day a month trading correctly with your size can really make a difference in your P&L and your mindset. So if you haven't gotten to this point where you've had comma days, just one is going to make a difference in your P&L. As long as you can keep yourself under control the rest of the month, and then you're going to have more confidence in yourself, and you will replicate that then over time as it happens more often. The confidence is important. This is what you're going to need as well to take size. You've got to be confident in yourself and the trade and everything that you're doing and the stock that you're picking and watching. So do your best to make progress with increasing your size trading over time if you can increase your profitability per trade to more than 3 times the risk. It's got to be 3+, all right? Make this a part of your trading plan as your trading improves. Every trader should have a money management trading plan for their future progress, not just today's trading. Every trader. If you have the same trading plan for money management today that you did 12 months ago, and you have not been able to improve on it, stop and think. It is time to review your timeline goals for your trading progress. I'm telling everybody to seriously consider where they're at with their trading if they're already doing it. You can't get nowhere doing nothing different. You just can't. All right? You've got to do something different. You have to. If you have to have a money management plan with your goals, like you've got to. Otherwise, why are you doing this? Otherwise you're not going to be anywhere better today than you were a year ago or 6 months ago or 2 months ago or a week ago. You've got to make changes. This is the only way to get ahead with your trading. So make use of your time wisely to learn what to do, because the money comes fast once you get it right. And I talk to people about this all the time. They want to take my class. They want to learn from me, and they get over anxious about it. And I say, you know what? All you got to do is just learn it. That's all you got to do is learn it. Because let me tell you something. Once you get it right, the money is going to come faster than you realize. You just got to learn it. You have to get it right first. You have to learn the information and then put it into practice. But as soon as you do, the money's going to come. And it's going to come fast once you get it right. And that's the great thing about trading. That's the great thing about market. That's the great thing about learning how to trade once you know what to do. I mean, that is the great thing. And that's why you stick with it. That's why you don't give up. That's why you stick with it. That's why you learn from someone like me that's doing it. You've got to get it right, because as soon as you do, the money's going to come. As soon as you do. So the results come with size after you know what to do, and you will be able to take the size once you know what a quality play is. And then after that, you can take days off. You don't have to feel like you're trapped to your computer every single solitary day of your life. You can take a day off. You don't feel like you're missing something. If you get up one morning and there isn't any good gaps, you can take a day off. You don't have to feel like, oh my gosh, I have to find a trade today. I'm going to die if I don't. No, you're not going to die and nothing's going to happen. You're still going to make plenty of money this week and this month. You've got to be able to step aside if there isn't anything good to do in the day. And if you want to take a day off and go on a vacation or a 3-day weekend, do it. You feel better about yourself once you start doing things right and then trading with size, because you will feel more freedom. You won't feel like you have to be doing this every day. Now, I love to do it every day, but there is some days that there isn't any good gaps to do, and then therefore there's nothing to do. And you just take the day off and you don't take any trades that day. You look for them, but if you don't find them, then what are you going to do? Nothing. Nothing. Absolutely nothing then. Because doing nothing is better than losing. Because there's plenty of days to make money and plenty of opportunity in the market. So I teach a class, many of you know this, called the Golden Gap. And the Golden Gap trading system is a system that teaches how to rate, pick, and play. The play is important. Bearish professional gaps. The Golden Gap trading system looks at 26 points to examine and rate the stock that is gapping. And this is how you can find which gap is the best to trade each day. So how do you make money with size? You find a golden gap, you find the highest rated gap on the day, and then you play the move of the stock on the day with size with a precise entry. Here's an example of one. This was NDSN. Now I'm going to break it down, this whole example of how you can play this on the day to maximize your money on a day with size so that you don't feel like you have to be chained to a desk every day to trade. Here's an example. This was a gap that happened back on the 22nd. See this guy here? It actually had some follow through here too. This was a really nice gap. It ran in the morning down hard. Okay. I forget the reason that this gap, I don't even remember now. Ran down hard in the morning, rallied up. You can't short this thing into this big of a push rally in the afternoon because it's late and it has rallied back more than half the move from the morning. Not that it's done for the day, but it looks like it might be. So what do? If you really like the gap and you really want to stick with it to see the potential of the target back down here at the low of the day, then you don't get off this thing and you wait. I was actually watching this at this point in here actually to see if it would break, and it didn't. And then this thing happened. Then it did this. Now you could be in here, but that would be a crazy thing to do. Why? Because it's not a quality play. This is the perfect example of a quality gap, and this is not a quality play in here because you have no guarantee that this is going to go at this point. Why? Because look at the rally it just did, and it moved back more than half the move with a morning move. So this might be done. You don't know. You have to wait. So you wait and you watch it and you stalk it, and you get this. And here's where you're in right here. Now this is the quality gap that happened in the morning, and this is the quality play. And here's the entry. The entry is 62.82. The stop is over 63.02. I'll go back and explain why in a minute. The risk is 20 cents. Now you can use whatever risk you want. It's 20 cents, but if you took 2,000 shares, it'd be $400. And the exit was at 3 o'clock. I'll show you that in a minute too. The profit's 26.40. The risk to reward is 6.5. That is a good trade. That is a high risk to reward trade. These are the kinds of trades that I'm looking for every single day that I'm ever taking a trade. I will pass on trades that are 2 to 1. You've seen me do them in the room. People have seen me do that. All right, you've got to have the risk to reward there. And actually, you know what? That's the target. The target was down here. All right, so the risk to reward on the full-on target is way more, but even the normal trade was 6.5. Down here at target, I don't even know what it would have been, but the bottom line is it would have been over 8. Okay, it would have been over 8, probably would have been over 10 at the end of the story. But 3 o'clock is reversal time. This thing's set up at a reversal time, 1:45. It gets to drop in at 3 o'clock. You don't hold a trade like this through the bounce when you got a nice move like this. You don't hedge your bet. And I'll show you again why also in a minute, why that was, you got to get out there once it bounces at that place. So here was the entry. You put the stop over these tiny little guys right here. You're not making any excuses for it. I found that when you start to make excuses for stuff, whenever you do, it never works out. Okay? This must go here and cannot back up at all. Why? Can anyone tell me? It already backed up. It backed up almost to the sky. If it backs up again, it's not going to work. So you take the trade, and this is it. This is it here. You're in it. And the reason this was good too is because it tried to go up over the whole number over 63 right here, couldn't do it, and came right back in. You could have actually shorted this as soon as it retested 63. You could have got right in there and not even waited for it to trigger. I've done that before. I don't tend to do that in the afternoon, but you could have. All right. And then you're in. And you're out here. As soon as this opens and starts to go green, you're out. Okay, because you're up all this money. So this is a good trade. 6.5 times the risk. And even if you lower the risk amount, you're still 6.5 times the risk. Okay? And instead of, if you don't want to risk 400, risk 200, and you make 1,300 bucks. It's the risk to reward that has to be there. But what I'm trying to say is you will be able to duplicate this and up it once you start to do this more. Good trades that pay a lot. That's where you've got to be. This 1-to-1, 1-to-2, 1-to-3 nonsense is just, it's a nightmare. It's a trading nightmare with commissions and all your costs. I mean, you get nowhere. Okay? Just seriously, really. It's just a trading nightmare after a while. And then you want to give up, and you're not up a lot of money, and you wonder why. This is what you got to be going for. Here, right here, this. And then all of a sudden, you wake up in 6 months, and this is 5,000 shares, and you're like, yeah, okay? So it's all about this. Now, here's another scenario. Just work with me here. You watch this gap in the morning, you like it. This is gobbledygook. You can't do anything here. This is a mess. Okay, I remember watching this in the morning. This was too thin and whippy, and you just can't do anything in here. Now, by this time, it had settled down. Again, this is aggressive, but this can't keep backing up. Why? Because it already did the stopping tail right here. Also, the gap is underway, and it's starting to get late. It's a reversal time. This thing triggers. It needs to drop into the next reversal time, which is 9:45. You're in right here, and to stop over these little bars right here, same thing. Why? Because something shouldn't keep shooting up like a lightning rod if it's going to go. Okay, so you're in. Over the base is the stop, and you get the drop. Now here was this place. Work with me here. This is the 1 minute. 9:40 was the entry. Price is 62.39. The stop is over 62.57. It's 18 cents. The other one was 20 cents. Let's just say you rolled out of bed in the morning, decided I'm going to risk $180 on this today. You're out into the drop, and you know what? This is almost the exact number as the one that in the afternoon. And I'm going to go back and point this out to you. The reality is this is a 5-to-1 risk to reward payout. Into the drop here. Into the drop here. Okay? Into 9:45. So you can't stay in this thing all the way down. If you stayed in all the way down, you got more. You see, this is where it went under 61 to the low of the day. I'm talking about getting out into this tail here. Because you got a drop like this, 61.50 actually was a number. As soon as it hits it and bounces, you can't stay in this thing if you're up that much money on the first play, okay? But if you did, you actually got paid more. Do you see how it broke under 61? I'm just talking about getting out in this tail. Can you see my mouse or not? Michael just said he can't see my pointer. Can you guys? You want me to refresh, or can you see it? Can everybody see my red and blue arrow? Anybody? Can you? Michael, can you see it now, making a circle? Can you see it, Michael? Okay. All right, let me refresh quick for Michael. And Michael, why don't you refresh quickly too, because maybe it's your thing. Here, can you see it now? There it is. All right, so I want you to make note of something. Do you see how this bounced in here? Say you did that trade. It was a number, there was an area. It was the same place here. It was the same place here in the afternoon. Look, 61.50, where it bounced in the afternoon here to get out. And the same thing here in the morning. Into that number, back up into it, and you're out. That was the tail. This is what I'm talking about precision and quality. You've got to see these things. This is how you're going to see these things to be able to get better entries and better exits. Okay? So the reality is that this first morning trade, if you had played it out, you would have gone out at the same place as the second trade in the afternoon. All right? And you would have seen to do that from doing it in the morning. If you hadn't done it in the morning, but had the whole chart up to see the whole thing, you would have seen the area, and you would have seen the area as a level to be able to look to take some profits off into it a second time. Even if you hadn't done the morning play, you would have looked at the chart. This is the kind of stuff you can learn from me. This kind of precision and detail is there. It's there in good gaps, and it's all in the numbers and the chart reading. So the reality is if you just in the morning trade and not even held it all the way down, forget the $61 target, which is about making money. You made 5 to 1. 5 to 1 with that play, you get a drop, you're out. Okay? You make 990 bucks, just shy of 1,000. Then you go back in the afternoon, you're looking for something to do. Now you just did the morning play. Now you're going to do the play that I just said the first time. You're already up $990. You did do the first play. And now you're up $990. What do? You wait, you watch, you stalk this. You almost gave up on it here, but you didn't. And you didn't grab it back in here. You waited. You did take this. What are you going to do? What are you going to risk? Well, you say, you know what? I'm going to make sure that no matter what happens, I'm going to risk money in this because it's good. I see it happening. The risk to reward is there for the potential back down to 61. It could be huge. If it doesn't get to 61, I still can make money, but I'm up $999 today. I want to make sure I get out with something. I'm going to risk a chunk, though, because this is a good play. I know it's a good play. Why? Because I tried to get over 63 and it couldn't. It's a reversal time 145. I've liked the gap all morning. I know it's going to work. I've got the market with me. Whatever your reasons are, all the reasons you like it, you risk $600. You take 3,000 shares in it, which is size. And no matter what, you're up 390, even if the trade fails. Okay? So the entry was the same as the play went over the first thing. 62.82 stop over 63.02 at 20-cent risk. You get out at 61.50, which was the area in the morning before it flipped in the afternoon. 3 o'clock is a major reversal time. The total profit is 39.60. 39.60 plus 990 is 49.50 in one day, risking initially $180. That was the initial risk in the morning that you took when you made the 990. And if it stopped out, if this trade stopped out in the PM, you still made 390 on the day. That's not bad. So you would have been upset because you would have been up almost 1,000, but this is worth it. Why? The risk to reward. Again, this is a 6.5. This is a 6.5. And at the low of the day, at the target of 61, if it made it there, which it didn't, but if it had, it could have. It would have been more. All right? It would have been way more. So you would have gotten a bigger payout. So do you see why? First of all, playing with precision counts in reference to the numbers to getting in and out of stuff and putting the stop at the right place. And second of all, precision counts in reference to being able to take sides, knowing that something is going to work and manage your money correctly as far as what you're doing in the morning, for the morning play, and then the afternoon. Here's another scenario. This is NDSN play to the max. This is something that I would do because I'm not normal, but I've been playing more conservatively lately. I really, really have. And I'm thinking about going back to being my normal aggressive self, because my normal aggressive self with my level of precision, really pays off for me. I think I'm better off being aggressive. I just think I trade better that way. But my normal conservative self would have risked a portion of that money. This is the Misty that's aggressive, which says this play is so good I'm risking everything I'm up on the day, and I take it. And then you have a huge day. So you take the play in the afternoon. You made the 990 from the morning. You have 100% conviction in the play, and you risk everything you got. And if it stops out, you're flat in the day. That's it. And I've even done this before where I'll risk it to even lose an R or one risk unit. Like I risked the 1,000 plus the 180 I had in the morning. I've even done that before too. Okay, so this is all about having conviction in what you're doing, and you got to have it. It's again 6.5. It was $1,000 risk. You made 6,600 bucks plus the 990 from the morning. You're up 75.90. You don't need to trade every day. You can take days off. You can get stopped out and lose 1 or 2 hours some days. It's not a big deal. You make money every month, and all of a sudden you've got a career. Out of nowhere now you're making money in a career that you enjoy. You're sitting at home in front of your computer and done every day by noon if you want to be. Okay, it can happen that well, except for the fact is that you can't do this for no reason. You cannot take 5,000 shares of something unless you know what the heck you're doing. I mean, you just can't do it. You have got to know what you're doing. You really do. I know people that know what they're doing and they still can't do it. So, it takes a certain kind of person, but I'm telling you that the first goal is to figure it out what to do. Then you got to get the entries really, 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 really precise where you're risking and making 3+ on almost everything you do. Like the majority of what you do, like 75 to 80% of what you do. And they say, you know what, geez, all I have to do is double this. And all I have to do is start taking sides. All I have to do is start taking sides, and then I'm there. You can't start to take more sides for no reason other than the fact, here, Here's an example. Say you're a trader and you're like, well, I just made $1,500 last month. That's good, but I really want to make $3,000. So I'm just going to double my risk. Okay, that is not the answer. That is so not the answer. Okay, the reality is that you have to make more profit in your trades in reference to the quality. Now that person might be making very profitable quality trades, but I have a feeling not. Okay, the reality is that it doesn't work that way. It's not really just let me double everything and I'll make double the money next month. You've got to make sure the play is good that you're doing where you're getting the risk to reward to start to be able to do this. Otherwise, don't even go there. Because what's going to happen is you're going to double your size and then lose. Then all of a sudden, you're going to lose $1,500 next month. You see what I'm saying? And then the size is really going to hurt you mentally because you're going to think, oh, I can never trade with size now. I knew I couldn't do it. You know, I have a friend who insisted that every time he took size, he lost. You know, and every time he took size, he did lose. And he just went back to taking no size. And he knew how to trade. He just was so scared of the size. There's no reason to be scared of size. It makes no difference. The risk to reward has to be right. That is it. And it's the entry is the key and the quality of the pick. So how is this whole thing possible? It's the golden gap. 26 points is quality. It's like going to buy Christian Louboutin shoes. It's like they're quality shoes. That's why they cost, you know, $750, $1,000 a pop. Okay, there's no comparison. Okay, there's just no comparison between, you know, I can't even think of a crappy pair of shoes because I don't buy crappy shoes. All right, but there's no comparison to a designer pair of shoes and a non-designer pair of shoes. There's no comparison. Designer shoes like Christian Louboutin are beautiful. You walk into a room, you go out to dinner, you look beautiful. All right, there's no comparison. All right, none. It's like buying a pair of shoes at Target. I can't even think of a name of a non-designer shoe. But the reality is it's about quality. That's where you've got to be. It's like a steak dinner versus a small sandwich, okay? That's the difference. Do you want to have a steak dinner when you go out to eat, or do you want to have a little hamburger, okay? What do you want? What's going to fill you up? You know what's going to fill me up? A steak dinner at Ruth Chris in Manhattan. That's what I want to do. I want, give me all the a la carte. I want the whole thing, and I want the apple pie for dessert too. I want the whole shebang, okay? The reality is that you've got to get to the point where you recognize quality, and the market will pay you once you do. And this has to do with your whole life, okay? Because if you accept less, then that's all you're going to see. If you realize that you deserve more, and you won't accept less, and you won't take trades that are only going to pay 1-to-1 or 1-to-2 with terrible entries and no risk to reward, you just say, I'm not taking those. I'm not doing those. I'm all about quality. That describes me to a T, and that is where you have to get with your trading, and you recognize that, and then the market's going to reward you, and the market's going to pay you, and then all of a sudden you're having steak every night, all right? And you've got 100 pairs of Christian Louboutin shoes. Are you buying for your wife? All right. So it's really about turning a little thing into a lot. When you learn how to be exact with your entries so that you can take size, you can turn almost nothing into something by just doing a very accurate trade. I'm going to show you another good example here in a minute. The ultimate goal is to do this with all of your trades, and the ultimate goal is to trade every trade with size. The ultimate goal is to trade every trade with accuracy. The ultimate goal is to trade every trade with quality. The ultimate goal is to trade every stock that is a quality gap. That is the goal. That is the goal that I strive for every single day in my room, that I strive for in my trading. I'm on the path. I'm doing it, okay? And I'm getting better. I'm going to keep getting better. This is the goal. This is it. This is how you really start to make serious money trading, and it translates into something bigger, and then all of a sudden you're doing it, and it becomes easy, and you're just in a flow. This was a trade that I actually did on Friday. I do not typically trade in the afternoon, all right? I saw this thing. I did it. I decided to do it. It could have gone to $7. It didn't, but it was a great, great play. This was AMRN on Friday. It actually had a nice move. Okay, this had a nice move down. But here's the play I did. This opened down here. This 15-minute here ran up and fell down here. Okay. I actually did this first trade, and then I was really thinking it was going to break. I was thinking it was going to break. It didn't break. I ended up lowering my stop and got out of it with next to nothing. I was really annoyed. I said, you know what? Gosh darn it, that thing was good. Didn't get off of it. Went, had lunch, came back. And it could have made something in here, but didn't really have a lot of it. I just took it just to chunk on my day, and I thought I was going to get to $7. Sat and watched it. Sat and watched it go up and test this number to the penny, and I shorted this thing here as soon as it retested this number. Here's what it did. It rallied up here. I got back in it. Rallied up here. You can see it better in the 1 minute here. Rallied up to this exact number here at 772 and held right here. I was in it here at 770. I took 15,000 shares of that stock. I didn't on the first trade, but I did on the second one. To be honest with you, I never even looked at what I actually risked. I just knew it was perfect, and I took it. And sometimes I do that. I'm not saying to anyone to do that, but I do that sometimes because I just trade sometimes where I just absolutely know it's terrific, all right? And I made a nothing play into the afternoon into something that did not even go to $7. If it had gone to $7, it would have been huge, okay? It didn't. I was just trying to get back down to the low of the day, okay? And then it started to bounce at 3 o'clock. Here it is. You can see. Here, I'm in this here in the retest. Fell into this area here. Didn't lower the stop, didn't do anything until it came up here at this point. It's starting to get late. It's 2 o'clock. I did lower my stop. I think it was 65. Yeah, it was 65. Fell again in here. Okay, came in here. I don't think I changed the stop at this point. And then in here, and I just took it off at 3 o'clock. Just got out. So I took a nothing. This looks like nothing. This looks like nothing. Now, I know you're going to say that's crazy to take 15,000 shares of something, but it's a $7 stock. Okay, it's a $7 stock, and this is a perfect play. And I was not needing the target of $7 to make money. Do you understand? I didn't need that. In the end, this paid 5 to 5 times the amount of the risk, and I did not get anywhere near the target. This was a great play, okay? And it was a good gap, all right? And the reality is that you can turn something into nothing with size. Now, you cannot take 15,000 shares of anything out of the blue. You're going to hurt yourself. But this you can, okay? You can. So this looks like nothing, and I turned it into something in the middle of a Friday afternoon because it acted perfectly. There. And I grabbed it immediately, all right? Now, I might not have done that if I got out of the first play better here, but then it was fine on the second one. But this is an example of how, you know, accuracy counts and can make and chunk onto a day for you if you know how to do it right, all right? You can't run out of bed and do this tomorrow morning, but I'm just saying this is where you can get to be. You know, this is totally 100% doable. You don't even need a big account to do this. I don't remember what the BP was for the whole trade, but you don't need some huge account to do this either. You just don't, all right? So again, here, this is the focus. This is the focus right here, okay? At the target, at $7 target, it would have been an enormous play, all right, with a 3-cent risk. I don't even know what it would have been. What would have been? Tom likes to figure this stuff out. 70 cents, if the move had gone 70 cents with a 3-cent risk, I don't know what it would have been, a lot. But it didn't need to. Low of the day, it's still 5.5, but you got to say low of the day. Low of the day was 750. I took it out at 754. All right. It actually, I think it just closed like around the low of the day. It actually closed. I didn't hold it past 3. So the moral of the story is not all trades are created equal. Tom, you like to figure out what the things would be at the maximum target. A 3-cent risk, if it gone 70 cents, what's that risk to reward? The moral to the story is not all trades are created equal. They're just not. Not all gaps are created equal. Not all trades are created equal. Oh, it would have been 23 times. 23. Okay, so if that trade had gone to $7, then it would have been 23 times the risk to reward payout, which I've gotten on plays. Okay, I've gotten on plays, and this is where I'm saying I don't need that though to make money. I just need to make sure that I'm getting more than 3 as often as I can in the quality. All right. Because you know what happens? Sometimes you're going to lose. You know, sometimes everybody loses. So the reality is if you're only shooting for 2 to 3 and then sometimes you lose at the end of the month, how are you going to pay your bills? You know, you're going to have another job. You're going to have a spouse. You're going to have something to pay your bills because you're going to have to pay your costs, your commissions, and everything else. The goal has to be more than 3 so that you can take size, so that you can start to make a living trading And then after that, you can move to the next level after making a living. All right, whatever that next level is for you. So the goal for me, and the goal I think for everybody that I teach, is to trade golden gaps. Number one, trade only golden gaps so you have a high rate of success in directional buy-in. Number two, get the best entry you can with precision so you can take size with it properly. Number three, manage it correctly by taking some off into dips, doing ads, and doing your best to hold to a bigger target with some. Okay, with some. That is the goal. Now, if that AMRN had just fallen and broken out of the low of the day, I would have probably got out of it and tried. You may trade it. You may be like me, and you may trade sloppily when you don't trade with enough size because you might not care enough. Now, I don't know if that's the case. Everybody's different. There's a fine line. Some people trade poorly with size because they're too scared to take it. Some people trade poorly with not enough size because they don't feel invested enough in the trade that they even care about what they're risking in it. So there's a fine line, and this happy medium is different for every person, and you yourself as a trader, you yourself as a trader have to know yourself and figure that out for yourself. And I would say take where you take exactly right now the total place where you don't feel comfortable at all, and then take the place where you don't give a crap and find a place in the middle. That's what I do. Let's just say the idea of taking 5,000 shares to you makes you shudder, and you couldn't possibly ever do it. And the idea of taking 200 shares, you don't care enough. Somewhere in the middle there, maybe between 1,000 and 1,500 shares is where you need to start being then, where you care. Okay, where you care, you do a good job, you can make decent money, and eventually then you work it up in chunks of 500 share lots to get it up. So I teach a class, and I'm doing the next one this weekend on March 9th and 10th, and it's called the Golden Gap Course. The Golden Gap Seminar teaches a 26-point rating system to find the best gaps to play each day, and that's how I find these gaps. The seminar also teaches you how to play the stop on the day, and the play is important because this is how you make money. The entry and how you're getting in, this is how you make money. The first day of the class is all the 26 points, and the second day of the class is the entries. And that is just as important as the points because that's how you're going to make the money. That's how you're going to know where to get in this thing. One of the most intricate and important pieces of information in the Golden Gap 2-day course is how to take precise entries with small stops to make a lot of money in a play. And learning how to trade these momentum moves with small stops is a very valuable and detailed piece of information that you will receive if you take the Golden Gap course. I've got to tell you that there is just no substitute for precision in trading. There isn't. There just isn't. And the better I become as a trader, the more I realize that these numbers are everything. Everything. I never knew when I realized and made my own system how good it was going to be. It turned out to be. I never knew that. I didn't do this for anyone else but myself. No one else but me. I took a class back in 2008, and I learned everything. And I came out and started trading, and I wasn't making money successfully, and I didn't understand why. Some days I would make money, some days I wouldn't. I tried every strategy I learned and didn't have a lot of success in any one of them. And then I was in a bunch of different trading rooms, and they were calling out trades all over the place. There's trading rooms out there that are so active, I don't know how anybody makes money in them. If you took every play the moderator called, you'd be down. There's just no way. If you even could follow everyone they called. I don't even know how the moderators are making money because they're taking so many plays. It's absurd. That's not the way to do it. It just isn't. It absolutely isn't. If you could get to a place where you could take 15,000 shares in everything you traded, do you have any idea how much money you make? Now, I'm not doing that in every trade I take, but don't you think that's my goal? I mean, seriously. I know I'll never be able to do that if I don't get good at one thing, and I am good at one thing. So the reality is that is how you make money. That is how you beat the quote-unquote system. It is not about overactive trading. Remember the group of the little tiny ducks or the chickens, the little chicklets, okay? I don't want to be like that. I want to go to Ruth Christian, wear Christian Louboutin shoes, and I want to own 100 pair. I don't want to take 15,000 shares of something. I want it to drop $2. You've got to get to a point that you want to make serious money, that you're gonna learn it. You're going to learn it right. You're not going to do crazy things and get sucked up into overtrading and all this other business about this thing's great and that thing's great and this strategy's good and that strategy's good and I'm going to do this, I'm going to do this, I'm going to do that. No. Okay? You only need one thing to make money trading, but you have got to be good at it. Okay? And you've got to learn it. And you've got to have conviction. And the Golden Gap course gives you conviction because of the detail, because of the precision, because it's complete, meaning that I teach you the points and I teach you the entries and the exits. And this conviction will help you to take size in your trades, and that's where you got to get. That's where you have to get to. And this will allow you to make more money. And once you know how to take precise entries, you will be able to do it with size and conviction. It's just about doing it one time. One time. You cannot press the button and take 15,000 shares of something and sit here and shudder. How are you ever going to do that? You'll be worried that it'll fly up and run $1 and you'll lose 15 grand. No, you have to know what you're doing. And if you do, it's a beautiful world. And all of a sudden you turn a nothing move into something. And it could have been better, it could have been bigger, it wasn't, but it didn't matter. All right. It was still profitable as far as the risk to reward. Okay, the risk to reward. You have to ask yourself, how badly do you want it? The reason that the road to becoming a successful, profitable trader and making a lot of money is a road that people travel on and get lost in. It's because somewhere along the way, they kind of get confused about what to do because so many people are telling them so many different things. And in the end, you have to ask yourself, how badly do you want it? You have got to be focused on the goal. The goal is happiness. The goal is making money. The goal is low stress, all right? And it may seem crazy to take a trade with 5,000 shares that's low stress, but it can be. And it can be less stress than taking 5 trades that are 1,000 share lots and not managing them properly or knowing what to do in any of them and having no clue. Okay, it is so much easier to just really want it bad enough that you're going to focus on the detail and get good at it. And let me tell you something, you are 100% capable of doing that because every person here has a brain. Every person here has a good brain, and you can figure it out and do it, and you can learn my system and start to do it. It's not like this is so impossible. Michael's saying he's agreeing with everything I'm saying. It's not like this is impossible. I'm just one lady, okay, that took on the market and figured this out for herself. I don't think a lot of people would have done this because it took a long, long time and a lot of money. But the reality is it was meant to do it, and I didn't know it at the time, but I was probably meant to teach it. And I was probably meant to teach it to tell people that this is really what you're supposed to do. And if people happen to find me, you know, they're lucky. And if they take my class, they're even luckier. Okay, because I just don't think there's a lot of people out there that are saying this. I think there's a lot of people that are saying you got to take this class and this class and this class and learn all these strategies and do all this stuff and keep trading and do all of our plays and keep chunking up the commissions. No, it's just not about that. You've got to get an edge in what you're doing. And what is that going to be? Okay? There is no like one edge. It's not like do one edge. Here it is, equals plus 1 pi. There isn't that. The edge is a combination of things. You deciding you want to make money and you're going to learn it. You want it badly. This is you. You're going to do it and you're going to succeed. Do you know that wanting it badly is an edge? There's no way I could have made it if I didn't want it bad enough. There's no way, okay? You must want it badly, and if you do, you've got edge number 1 without knowing anything else, okay? Because some people think that they want to do it, but they don't want to do it bad enough, and they're, maybe, today I want to do it, tomorrow I don't want to do it, I lose one day, I'm going to give up. No, you must have 100% conviction in yourself. You've got to want it, and you cannot deviate from that, number 1. Number 2, you have to find a strategy that is detailed and focused and precise that can give you an edge because the strategy works most of the time. And I do not know the percentage of time that my strategy works, but I've made a decision today. Tom is in the room, and he's in my room. He's actually going to start tracking it starting tomorrow. We're going to give Tom a name. He's going to have a full-time job in my room. He's going to track it, my number 1 pick every morning. He's going to track it for the next year. I can't wait to see what the numbers are. I haven't tracked it myself. I could go back and look at my sheets, but it would take me a day, and I'm not going to do it. He's going to start doing it for me tomorrow. And for himself. And if I do well, then Tom's going to give me all of his money. But the reality is that you've got to find something that works a lot, okay? And actually, if it works a lot and you get more to 3-to-1 risk at your plays, it doesn't even have to work more than 50%. but I actually think my 26 points works, 8 to 90%. I mean, it's high. We're going to find out when Tom tracks it. But that's the next thing. You got to find a strategy that gives you an edge, and then you have to find a play that gives you an edge. And then you make 3+ on the play. And if it goes to target, you make 8 to 10. Okay? And you will have days when it goes to target. In February, there were many days when stocks went to target. There were many days when they went past the target, and that will happen. All right? And then you have bigger days on those days. And then after that, you trade with size after you've got all those things into play. And then that's how you put it together. But in the meantime, you have to want it badly. That has to be there, and that has to be consistent all the time. All the time, that has to be there. So if you're looking out, waiting for something to happen, waiting for this huge day you're going to have just out of nowhere, over quantity in your trading, and that is going to provide the results that you want to see. And that's just going to be a decision that you make, okay? You have to make it happen. You have to be the one to make it happen. There isn't anyone else but you that's going to make it happen. You've got to make it happen, okay? I can be here for you. You can take my class. I can teach you everything I know. Ultimately, you're the one that's going to have to make it happen, and you're the one that's going to have to decide if you want to take my class. You remember, time is money. Time is money. Don't give all your hard-earned money away to the market and mistakes. Invest in your own learning, your own education, your own well-being. This is about your own well-being. This is about loving yourself enough to take a chance to do something different than you've been doing, or do something at all. If you're not even trading, this is about deciding, I want to learn to trade. Use your money for value-driven education, something that is worth something. Don't waste months or years of your life trying to make a little bit of money while you're actually losing money in commissions in the market by taking plays and doing trades that are not of value, meaning the risk to reward is not there, okay? Because all along you're not going to be able to do size as well because you don't have the risk to reward. So don't waste time trading for months and years with no conviction. You need to have conviction, and that first starts with a good strategy and a system with detailed plays. You know the difference I can tell when I talk to people? When I know if they're really doing it or not? I can hear it in the voice if they have conviction. I can hear it in the voice when they talk about what they do. I can hear it in the voice when they talk about what they do, or if they're talking to me and they're in a trade and they want to know what I think of it. If they have to ask me, they don't have conviction in it, okay? If you've got to double check what you're doing with 10 different people, 5 different friends, you got to call everybody on the phone, you got to text them, you got to say, Melissa, what do you think of this? What do you think of that? What do you think of this? I got my friends texting me. If my friends are texting me and they're already in the trade, it's a little late, okay? They should not be in it. They don't have conviction if they want me to double, triple check it. So invest in yourself as a trader. Invest in yourself as a trader if you want to be successful. This is what you're going to have to do. So here's the class I'm doing, March 9th and 10th. It's this weekend. Today's Tuesday. I have a few spots left for the class. I try to keep my classes to a certain amount of people because I want to be able to answer everyone's questions. I want the class to be a quality class, meaning that everybody gets attention from me. And I do have people that retake the class occasionally too. So the reality is that if you want to do it, try to let me know as soon as possible so that you can get in this weekend. It's March 9th and 10th. It is still earnings season in the market. You can learn how to trade, gaps, and rate them now during earnings season and start to get going doing this and learn it with precision with the entries. And I'm offering a special for March. So anyone that takes the class is going to receive another class for free, which is a class that I designed that has nothing to do with charts at all. It's all about the mind. It's called Trading Psychology, and it's called Wealth Manifestation. It is 2 classes for the price of 1 for March students. And everybody that signs up, I'll tell you the date for that class when you sign up for it. It's a really neat course. I actually did it for the first time, I think 2 weeks ago. And I had some great feedback from it. It was an exciting class. This class is about your mind. It's a half-day course. It's not a full weekend. It's a half-day course, 3 hours. But it is a great combination to learn with the Golden Gap class for the next month for you because it's really going to set you on the right course where you need to be, not just with your trading, with the technical analysis skills, but also with your head. Yes, retakes are free, Michael. Of course they are. And talking to me is free. You know, I spend a lot of time talking to people, emailing people that have taken my class, that are in my room. You know why? Because I generally want people to make it. I understand that there's a learning curve. I also understand that it's different for every person because some people are new, some people are not new, some people are doing this for years, some people are doing it for 1 year. Everybody's on a different level, and I care about people's success. So yes, retakes are free. So thank you. Does anyone have any questions? Does anyone have any questions at all about anything before I go look and see where pay is trading at right now? Do I dare look? Any questions about anything else before I take the PowerPoint slide off? Was this helpful at all for anyone? For any one of you, you know, pay is gapping up. Darn it, Tom. Shoot. What's gapping down? Can we look at some stuff to